Okay, guys, good morning. Yesterday we stopped at 44 AA, if you remember. 44 AA, about the maintenance of books of accounts, right now? Then today, now, we are going to finish the balance part before the break, and after the break we are going to start with capital gains, okay? Yeah, see, 44 AB, next section. 44 AB talks about compulsory audit of books of accounts. So yesterday you maintained your books of accounts, no? Okay. Today you are going to get them audited. So why will you audit your books of accounts? Simple. Your books of accounts must be reliable. And we also will require your books of accounts in future. And we should not get your books of accounts which are manipulated. So how do we rely on your books of accounts? How do we feel that they are genuine? So we want you to get the books of accounts audited. Now see, getting the books of accounts audited is not compulsory for all the SSEs. So who are compulsorily required to get the books of accounts audited? Okay. See, as per point number 1, SSE is any person who is engaged in any business. Did I write business or profession or only business? So SSE is engaged in any business. And from that business during the previous year, the turnover is more than 1 crore. More than, so if the turnover of your business in this year is more than 1 crore, now compulsorily for that book, for that business, separate books of accounts are to be maintained and they are supposed to be audited also. So for any business, the books will be required to be compulsorily be audited if the turnover of that business is more than 1 CR. More than 1 CR. Yes or no? Now there is an exception to this point, that even if your turnover is more than 1 crore, still you are not required to get the books of accounts audited. But for that you have to make sure that during the previous year, the total receipts in your business, out of that total receipts, cash receipts are not more than 5% of your total receipts, as well as cash payments in your business, cash payments from your business are not more than 5% of total payments in your business. So from your business, whatever receipts are happening in your business, yes or no, whatever receipts are happening in your business, out of those total receipts, 5% or less should be in cash. Meaning 95% or more receipts in your business must be through modes other than cash, as well as 95% or more payments in from your business should be by way of modes other than cash. If these two conditions, both the conditions are satisfied, then for you the tax audit limit will not be 1 crore, it will be 10 crores. Meaning even if your turnover is more than 1 crore, but up to 10 crore, you are not required to get the books of accounts audited. Will you remember this? So are you in a business? Yes or no? Turnover of that business is more than 1 crore. Compulsorily maintain the books and get them audited. But if the turnover is more than 1 crore, but it should be up to 10 crores, still you are not liable to get the books of accounts audited if in your business, out of the total receipts, 5% or less is in cash, yes or no, as well as out of the total payment in from your business, 5% or less is in cash. Understood? So this is the first case where the books of accounts are required to be audited. Now what about the professionals? What about the professionals? Are you in the profession? Are you in the profession? Yes. So from that profession, whatever gross receipts are there in this year, if the gross receipts are more than 50 lakhs, if the gross receipts are more than, compulsorily for that profession, separate books are to be maintained and they are supposed to be audited also. So just like business, for any profession also, the books are to be maintained separately and they are supposed to be compulsorily audited if from that profession the gross receipt is more than 50 lakhs. Gross receipt is more than 50 lakhs. Will you remember? Will you remember? Now these 2 points you are supposed to remember. Above types of assessees are compulsorily required to get their books of accounts and documents audited. Now, see, you are supposed to get the books of accounts audited. Okay, no? How will we come to know that you have got the books of accounts audited? You will have to get an audit report prepared for that. Now, you are getting the books of accounts audited, then getting an audit report made for that audit. Now we will come to know that both the things have happened only if you file that audit report with us. So 3 activities are to be done. First, get the books audited. Second, get the audit report prepared from the chartered accountant. Yes or no? And file that audit report to the income tax department. Now, till what time all these activities must be completed? So there is a due date. There is a due date to get the books audited, get the audit report prepared and get it filed. There is a due date to get the tax audit etc. done. And what is that due date? The due date is the date which is 1 month immediately preceding to due date of filing your ROI. What did I say? Date which is immediately 1 month prior to due date of filing your ROI. Now what is the due date of filing your ROI? That is given in section 139(1). That is given in section 139(1). You all know that. What is the due date of filing ROI? In some cases it is 31st July, some cases it is. So now pay attention, I will tell you. As per section 139 subsection 1, due date. What did I say? Due date of filing ROI. Okay, this due date will be 31st October of the assessment year. 31st October of the assessment year. Now 31st October of the assessment year in the case of every company. So if you are a company, for you the due date of filing ROI for this previous year will be 31st October of the assessment year. And every person other than company who is liable for tax audit under section 44AB. So whether the company is liable or not, you are not supposed to see that. For every company, the due date of filing ROI is 31st October. And for every other person, the due date will be 31st October only if that person is required to get the books of accounts audited. So if you are covered by 44AB provision, which provision? Tax audit provision. For you, the due date of filing return of income will be 31st October of the assessment year. Yes or no? And every partner, what did I say? Every partner of the firm which is liable for tax audit under section 44AB. So for that firm also the due date is 31st October and every partner of that firm also the due date will be 31st October. That partner will file his individual return on or before 31st October. Yes or no? Now, sometimes the due date of filing ROI is 30th November. 30th November of the assessment year. Now this is in the case of assessees liable for transfer pricing audit under section 92E. So there are certain SSEs to whom the provisions of transfer pricing are applicable, and as per the provisions of transfer pricing, they are supposed to get the transfer pricing audit done. So if you are an assessee to whom transfer pricing audit is required to be done, for you the due date will be 1 month extended. It will be 30th November. Yes or no? And there is one more due date, 31st July of the assessment year, and this is the due date for all other assessees who are not covered above. Okay, no? So these are the due dates which are supposed to remember. Due date will be 31st October also. Due date can be 30th November also, and due date can be 31st July. This is the due date of filing the return of income. So when are you going to file your return for this previous year? In the assessment year, on or before 31st October, on or before 30th November, on or before 31st July. So every company will file for this previous year. For this previous year, the return will be filed by 31st October. If you are a company, if you are a person other than a company, then for you also the due date will be 31st October if you are liable for tax audit. If you are liable for, what if a firm is liable for tax audit? Then for that firm, the return filing due date will be 31st October, and every partner of that firm also will file his individual return on or before 31st October. Assessees to whom transfer pricing audit is required to be done 30th November. Every other case. So now, right now we are doing which provisions? Right now we are doing tax audit provisions, 44 AB. So if you are an assessee, the turnover of your business is more than 10 crores, sorry, more than 1 crore, or you are an assessee, the gross asset of your profession is more than 50 lakhs. Are you required to get the books of accounts audited? So you are an assessee liable for tax audit. You are an assessee liable for tax audit. For you, what will be the due date of filing ROI? 31st October. You have to check 1 month prior to date, 1 month prior to 31st October. So what will be the date which is 1 month prior to 31st October? 30th September. So on or before 30th September, get the tax audit done. Get the audit report prepared and file that audit report with the income tax department. And once all these activities are done, then within 1 month, that is on or before 31st October, file your return of income also. Understanding? Sure, sir? Okay. Now, see, books of accounts are to be audited. I told you, no? Now, see, if your books of accounts and documents are already audited under any other law. So there are sometimes some laws which will tell you to get the books of accounts audited. Possible, not possible? For example, there is a company. So as per the Companies Act, the company is required to get books of accounts audited. So are your books of accounts already audited as per the requirement of any other law? So no need to get them audited once again, because they are already audited as per any other law which was applicable for you. Yes or no? Yes or no? But don't think that the audit report which was made for that law will also be applicable here. For the purpose of Income Tax Act, separate audit report must be prepared, and that audit report will be in form number 3CA. Which form? So are you an assessee? Already got the books of accounts audited as per any other law? Are you going to get the books of accounts audited once again? No, no need to get the books of accounts audited once again. For income tax purpose, the books of accounts are not required to be audited once again if they are already audited as per any other law. But for income tax purpose, a separate audit report has to be prepared in separate form, and that is form number 3CA. Understanding? Now what if no law was applicable to you which was telling you to get the books of accounts audited? That means your books are unaudited. Then compulsory you have to get the books of accounts audited at least once. For income tax purpose, get them audited. Yes or no? And now after getting that audit done, now you are supposed to prepare an audit report. Now this time the audit report will be prepared in a different format, and the format will be form 3CB. What will be the form? So if already the books are audited, will you get it audited once again? But audit report will be prepared as per form 3CA. If the books are not audited as per any other law, at least get them audited once for income tax purpose. Hello? Then the audit report will be prepared in form number 3CB. So whether you are preparing your audit report, getting it prepared in form number 3CA or 3CB, along with these audit reports, one statement is also to be filed. Statement of particulars. That is given in form 3CD. All these things you are going to do in your articleship. Understanding? But when you are standing in front of that CA who is going to take your interview for articleship, he is going to ask you all these things. That whether you have studied all these things or not. So, assessee, liable for tax audit. Liable for tax audit. Will you get the books of accounts audited once again if they are already audited as per any other law? But will you prepare a separate tax audit report? Under which form? Plus 3CD. Statement of particulars. Yes or no? Assessee, are you liable to get the books of accounts audited as per any other law? No. No. So are your books already audited? No. At least get them audited once for the income tax purpose. And now the audit report will be prepared in form number 3CB, and along with that 3CD, statement of particulars. Okay now, everyone? So books of accounts and documents not to be audited once again for income tax purpose if they are already audited as per the provisions of other law. Books of accounts and documents to be audited compulsorily for income tax purpose if they are not audited as per other law. Now audit report must be prepared whether or not books of accounts and documents are already audited under any other law. Such audit report shall be made in prescribed format. Shall be prepared in prescribed format, and that format is form 3CA and form 3CB. If books and accounts and documents are already audited under any other law, then form 3CA, not audited, getting audited for the first time for income tax purpose, then form 3CB. Form 3CD must also be prepared along with audit report in form 3CA and 3CB. And what is that form 3CD? It is a statement of particulars. Audit, report, filing. There is a time limit to do that. And what is the time limit? On or before the date which is immediately 1 month prior to the due date of filing the ROI. So for example, if I will tell you your previous year is 25-26. What is your previous year? So for the previous year 25-26, in your business, in your profession, if the turnover was more than 1 crore or 10 crore, as the case may be, or for your profession, the gross receipt was more than 50 lakhs. So for this previous year, books of accounts are to be maintained and they are supposed to be audited. So what is the due date of filing ROI for this year? The due date will come in the assessment year 26-27, and the due date for you will be 31st October 2026. This is the due date of filing. Filing of what? ROI. 1 month. The date which is 1 month prior to this. So the date which is 1 month prior to this will be 30th September 2026. On or before this date, audit must be done. Audit report must be prepared and audit report must be filed. Done, sir? Everyone understood? Okay. Now see, what are the due dates of filing? ROI that I have already given. Okay now? Then 44 AB is done. Now coming to 44 AD. But before that, a small question. Small question. Illustrations we left, no? Few illustrations. Which was the last illustration we did? 14, I guess. Okay, no? Come to illustration number 15. Start. Yesterday we did 44 AA. Compulsory maintenance of books of accounts. So if the assessee is engaged in any specified profession, those 11 professions, yes or no? And the gross receipts of that profession in all the last 3 previous years was more than 1,50,000, then compulsorily that assessee is required to maintain the books of accounts and documents which are prescribed in rule 6F. So we know this is a person carrying a profession of film artist is a specified profession as per 44 AA subsection 1, and his gross receipt from his profession in the last 3 years. Can you see? But in 1 year it is not more than. And what is the obligation regarding the maintenance of books of accounts in this case? Is he required to compulsorily maintain the books and documents? Yes. Compulsorily he will maintain prescribed books. If in this year, if not in the last 3 years, but in the current year, the receipts are likely to be more than 1,50,000. What if current year also it is not likely to be more than 1,50,000? Then also compulsorily he will be required to maintain the books and documents, but he will not be required to maintain prescribed books. Now he will maintain such books as would enable the assessing officer to determine his total income. That is what is the answer should be. So in the given case, since the gross receipts of Vinod in the all 3 previous year preceding to the current previous year is not more than 1,50,000, still he will be required to maintain the prescribed books. If in the current year the gross receipts are likely to be more than 1,50,000. But if that is also not the case, then also Vinod will be compulsorily required to maintain the books and documents, but this time he will not maintain the prescribed books. He will have to maintain such books and documents as would enable the assessing officer to determine his total income. That's it. Read the answer at home. Okay. So this was your illustration number 15. And don't be surprised if you get such type of question in the exam for at least 4 marks. And if 4-mark question can be given, it can be given like this. Okay. But still the students will say that the paper was difficult. Why? Because you are not going to study all these things. Without studying all these things, you will go to exam. And for this question, many students will be writing the answer with their general knowledge. And the type of answers the students will write will be like this. Listen. For every assessee who is earning income, he is liable to pay income tax. And to pay that income tax, total income has to be calculated. To calculate that total income, compulsorily books are required to be maintained. Hence, we know this is also required to maintain the books and documents. Following books of accounts and documents he will maintain: P&L account, trading account, balance sheet. I will come in the exam then and that time and give you a tight slap there only if you are going to write all these bullshits. They are telling you to give the answer as per the provisions of the Income Tax Act, and you are writing the answer as per your general knowledge. And if you will see the final answer, you will never see the answer which you have already written in the exam as per your general knowledge. So answer needs to be very specific as per the provision of the Income Tax Act. And what is the provision of Income Tax Act? 44AA. And 44AA tells you this, and you are writing something else. Are you going to get any marks? No. Understanding what I am trying to tell you? So, in this question, 44AA. Okay, read this part at home. Now see, we'll go to next section now. 44 AB is done, no? 44 AB is done. Now we are going to come to 44 AD. Along with 44 AD, we are going to do 44 ADA also and 44 AE also. But first we are going to focus on 44 AD. Okay. Now you are going to see there and you are going to give me the answers. Which section we are going to do first? 44 AD. Now what your section 44 AD says? This is a presumptive provision. What is this? Presumptive provision where your PGBP income will be presumed. Presumed means an amount will be assumed that as if this is your PGBP income. You are not supposed to compute your PGBP income by following regular provisions if you fall under the provisions of 44 AD. Now first of all, which assessees will fall under the provisions of 44 AD? Meaning, which are the assessees eligible for taking the advantage of this section? Okay. So number one, the assessee has to be a resident. Compulsory. Non-resident cannot take the benefit of this section. So to take the benefit of this section, you need to be a resident. Are you a resident? Yes. But you must be an individual or HUF or a partnership firm other than LLP. Now for the purpose of section 44 AD, the term firm does not include LLP. So LLPs cannot follow the provisions of 44 AD. But any other firm which is not an LLP, normal partnership firm, yes or no, they can follow the provisions of 44 AD. So are you an assessee? You must be a resident individual or a resident HUF or a resident partnership firm other than LLP. Now you are engaged in any business. You are engaged in which business? Any business, but your business should not be a specified profession under section 44 AA, subsection 1. Those 11 professions you remember? For these professions, separate provisions, presumptive provisions are made under section 44 ADA. The next section is applicable for them. So the assessee should be engaged in any business other than a specified profession. Other than a specified profession and other than a transport business. Because for transporters also a separate provision is made, 44 AE. So 44 ADA is applicable for specified professions. 44 AE is applicable for transporters. So if you are a specified professional or you are in the business of transport business, for these two businesses, the provisions of 44 AD is not applicable. Provision of section 44 AD is applicable for all business other than specified professions, other than transport business. So for all business, this provision can be applied. Whether you are in the trading business, whether you are in manufacturing business, whether you are into any type of business. But the business should not be earning commission and brokerage. And the business should not be agency business. So first of all, are you doing any business other than commission and brokerage, other than earning commission and brokerage, and other than any agency business? So apart from these two businesses, you are into any business. But remember, you should not be engaged in any specified profession, or you should not be engaged in any transport business. Then for your business, this business which is known as eligible business, you can follow 44 AD. You can follow, provided the turnover of this business during the previous year does not exceed 2 crores. So first of all, tell me what all things I have said so far. Who is the assessee? Who is the assessee? Assessee must be a resident. Resident, individual or HUF or a partnership firm other than LLP. Other than LLP. Okay. Now this resident individual, this assessee is engaged in any business. Any business means we are talking about specified professions under section 44 AA subsection 1, those 11 professions? No, we are not talking about those professions. Then are we talking about transport business? Transport of goods. Transport of goods. Okay, we are not into that business also. And we are not in the business of earning commission and brokerage, or we are not in the business of agency. Yes or no? Other than these 4 items, you are engaged in any business. Now from this business, your turnover during the current previous year, your turnover should be how much? Less than or equal to 2 crores. So for this business, you can follow 44 AD. For this business, you can follow 44 AD. But sometimes, even if your turnover is more than 2 crores, still you can follow 44 AD. But your turnover should not be more than 3 crores. So 3 crores will be the limit applicable for you. 3 crores, up to 3 crores also you can follow 44 AD. Provided from this turnover, what did I say? From this turnover, the total receipts during the year is not more than 5%. What did I say? Not more than 5%. So that there was an amendment in this section which said that if the turnover is more than 2 crores, but it should not be more than 3 crores, then also 44 AD can be applied. But for that, you have to make sure that in your business, 5% or less turnover is received in cash. So, for example, your turnover is 1.8 crores. 1.8 8 crores. Can you follow 44 AD? Yes. There is no condition. There is no extra condition. You can still follow 44 AD because your turnover is within the limit of 2 crores. What if your turnover is 2 crore 40 lakhs? Can you still follow 44 AD? The answer is yes. But for that you will have to make sure that out of the turnover 2.4 crores, 5% or less is received in cash. So take 5% of 2.4 CR. How much? 12 lakhs. So during this entire previous year, if your turnover is 2.4 crore, out of that 2.4 crore, how much you have received in cash? 12 lakh or less. Then also you can follow 44 AD. What if you have received 15 lakhs in cash? What if you have received 15 lakhs in cash? Have you received more than 5%? Then you cannot follow 44 AD even if your turnover is 3 crore or less. Getting my point? Since your turnover exceeds 2 crore, you cannot follow 44 AD. Why? Because out of the total turnover, 5% or less is not received in cash. More than that, received in cash. So first of all, tell me, if I say your turnover with this, if I say your turnover in the first case is 1.6 crores. 1.6 crores. Then out of this, max cash receipts, that 5% limit, yes or no? Maximum cash receipts, that is 5%, yes or no? And actual cash receipts, both you are supposed to compare. So here I am not going to check all these things. Why? Because the turnover is already less than 2 crores. Can I follow 44 AD? So eligible for 44 AD? Question mark. Tell me yes or no? Yes, he is eligible. No need to check 5% and no need to check the actual cash receipts out of the turnover. Yes or no? Now what if your turnover is 1.9 CR? Will you check all these things? No. Are you eligible? Yes. What if your turnover is 2 crores? 2 crores. The turnover should be more than 2 crores. Then you cannot follow 44 AD. Okay, no? But there is one exception, where even if the turnover is more than 2 crores, but it should be up to 3 crores, still you can follow 44 AD. Yes or no? One exception. Otherwise, the moment your turnover will be more than 2 crores, 44 AD benefit cannot be taken. So in this case, will you check this thing? No. You are still eligible because up to 2 crores, whatever is your turnover, okay, you can follow 44 AD. Now tell me, if your turnover is 2.4 crores, but it is within the limit of 3 crores. It is within the limit of 3 crores. Can you follow 44 AD? But first of all, you will have to check 5% of this. 5% of this is 12 lakhs. 5% of this is, and actual cash receipts were only 8 lakhs. The turnover received in cash is only 8 lakhs, which is within the limit of 5%. Yes or no? And your turnover is also less than 3 crores. Can you follow 44 AD? The answer is yes, you are eligible. But what if your turnover was 2.4 crore? The 5% of that is 12 lakh and actual turnover received in cash was 18 lakhs. So even if your turnover is within the limit of 3 crores, even if it is within the limit of, you are not eligible for 44 AD. You are supposed to calculate your PGBP income by normal provisions. You cannot apply the presumptive provisions. Will you remember this? What if your turnover is 3 crores? So take 5% of that. Take 5% of that. 15 lakhs. Now if you will check 14.99 lakhs. Eligible or not eligible? Eligible. Now 3 crores. This is 15 lakhs. 15.01 lakhs. Not eligible. Sure. And what if your turnover is 3.3 crores? Don't check all these things. You are not eligible only. Understanding? So even if these points are satisfied, meaning 3.3 crore, take 15% of that. Sorry, take 5% of that. $16.5 lakhs. So now whether you have received 14 lakh in cash or you have received 18 lakhs in cash, whether you have received less than or equal to 5% or more than 5%, you are not eligible only because the turnover exceeds. So first of all, tell me, if your turnover was 3.3 crores, okay, and actual cash receipts was 14 lakh. See, cash receipts is within the limit of 5%, but still you cannot follow. Understanding? And what if it is 3.3 crores, it is 16.5 lakh, and you are receiving how much? 18 lakhs. Then confirm you are not eligible because your turnover also exceeds 3 crores. So beyond 3 crores, if you are going, no need to check all these things. Getting my point? Up to 3 crores. What did I say? Up to 3 crores. If your turnover is there, you can take the benefit of 44 AD. You can take the benefit of 44 AD. Okay. So now tell me, up to 3 crores, if your turnover is there, then you have to make sure that the total cash receipts should be within the limit of 5%. 5% of the total turnover. 5% of the total turnover. And out of that, how much you have received in cash? You have to see the cash receipt should be within the limit of 5%. So even if your turnover is more than 2 crore, but since it is up to 3 crores, still you can follow 44 AD. Now see, if eligible assessee is there, which assessee is there? Eligible assessee is there, doing eligible business, turnover of that business is up to 2 crores, or in some cases it is 3 crores, then that assessee is eligible for what? That assessee is eligible for 44 AD. Now if you are eligible for 44 AD, okay. So now what are you supposed to do? You show your PGBP income on what basis? Presumptive basis. PGBP income on what basis? Now what is the presumption? What is the assumption? That at least 8% of your turnover or higher amount, show this amount as your PGBP income. It will be presumed that this is your PGBP income. So calculate 8% of your turnover. Calculate 8% of your turnover. At least 8% of your turnover show us as the profit of your business. Or a higher sum also you can show. But a sum below this, no. At least 8% of your turnover you are supposed to show as your income. We will assume as if that amount is only your PGBP income. No need to follow the regular provisions. Meaning, if you will show at least 8% of your turnover as your income, or a higher sum also you are showing as your income, a sum which is higher than 8% can also be shown. Yes or no? But at least 8% you show, we will consider that this amount is only your PGBP income. Now, if you show this thing, no, deductions which were available under section 32 38. 32 will not be allowed as a deduction separately. You have already claimed them and we have already allowed. It will be assumed as if you have claimed these deductions and we have allowed this deduction to get this income. So whatever income you are showing will be treated as your PGBP income, but that income should be at least 8% of turnover or a higher sum. Show this amount. Now when you will show this amount as your PGBP income, no? We will assume as if you have claimed all the deductions and we have allowed all the deductions. So these deductions will not be separately allowed. If you show at least 8%. So now see, what other benefit will be there? The biggest benefit is, now the calculations have become very, 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 very easy. You just have to take your turnover and show at least 8% of that as your business income. Now if you will show this much amount as your PGBP income, separately you are not supposed to claim the deduction. That means no need to remember the deduction, disallowances and all. Meaning no need to follow the regular provisions to calculate your PGBP income. See, your calculations will become easy. Number one. Number two, if you follow regular provisions and your turnover exceeds 1 crore, you are required to maintain the books also and you are required to get them audited also. Yes or no? So up to 2 crores, we are giving you the benefit that show at least this much profit. No need to maintain the books and no need to get them audited also. So the requirement of maintaining the books and get them audited for this business will be not applicable on you. So first of all, will you claim the deductions separately? No. Because you have already claimed and we have already allowed, it will be assumed. Okay. And then books of accounts not required to be maintained and books of accounts not required to be audited. See, that compliance burden which comes, that compliance burden is gone. And the calculations also became easy. How easy? You just have to take your turnover for this year and apply 8% on that. And whatever amount is coming will be assumed as if this is your PGBP income, or a higher sum also you can show as your PGBP income. No need to remember the deductions, disallowances, yes or no. No need to calculate your PGBP income by following regular provisions. And also the books are not required to be maintained and they are not supposed to be audited also. So is it a beneficial provision for you? Yes, this is a beneficial provision for you. And we also don't want to waste our time on small assessees like you. Understanding? Because your turnover is only 2 crores or less. So in the eyes of law, you are a very small assessee. So show at least this much income as your business income. We are happy by charging tax on this much income. But if you are charging tax on a lower income as compared to that, yes or no, then calculate the income separately by following regular provision, claim all these deductions also. And since your turnover is also more than 1 crore, now the books of accounts will also be required to be maintained and they are supposed to be audited also. So in that particular scenario, the audit will be compulsory. Which scenario? If your turnover is 2 crores or less, but it is still more than 1 crore and you are not showing the profits up to 8% of your turnover also. You are showing less than that. Understanding? So first of all, tell me, who is the assessee? Who is the assessee? Resident, individual, HUF or firm other than LLP. Doing any business, but the business should not be a specified profession. It should not be transportation of goods. The business should not be earning commission and brokerage. The business should not be agency business. For this business, other than these, for this business, the turnover during the current previous year should be up to 2 crores. In some cases, the turnover should be up to 3 crores also. Yes or no? For which businesses? Even if the turnover is more than 2 crores, but it should be up to 3 crores. If in that business, the 5% of the turnover or less is received in cash. So for those businesses also the 44AD provision can be followed. Now 44AD says that show this much amount, minimum amount as your PGBP income. How much amount? At least 8% of your turnover or a higher amount you can show as your PGBP income. Now if you show at least this much or a higher amount, you follow 44AD, then no need to claim the deductions under section 30 to 38 separately. It will be assumed as if you have claimed and we have allowed. No need to get the books of accounts audited, books of accounts maintained separately, and no need to get them audited. Will you remember? Sure, sir. Now pay attention. Instead of this 8%, you can take 6% also. Would you like to pay tax on a higher amount or on a lower amount? So instead of showing 8% of your turnover as your PGBP income, you can show 6% also of your turnover as your PGBP income. But the 6% you can show for the turnover received on or before, on or due date of your ROI by prescribed modes. For every other turnover you are supposed to show 8%, but the turnover which you have received in this year or on or before the due date of filing ROI of this year by way of prescribed modes, on that turnover you can take 6% instead of 8%. So for example, the turnover in the business for the current previous year, meaning your previous year 25-26. In this year your turnover was, say for example, 1.9 CR. 1.9 CR. Okay. Now out of this turnover, some turnover is received in previous year 25-26 itself, and some turnover is received in the next previous year, meaning received in previous year 26-27. Now out of the turnover which is received in 25-26, some received in prescribed modes and some turnover is received other modes, other than prescribed modes. Yes or no? Other modes means other than prescribed modes. During the next year, some turnover will be received on or before. What did I say? On or before due date of what? ROI. And some will be received after the due date of ROI. So on or before due date received in prescribed modes, yes or no, and received by other modes other than prescribed modes, and after the due date in prescribed modes, yes or no, or other modes. Now what I am going to do, please pay attention. What was your total turnover? 1.9 CR. This is your total turnover. Out of that, this year you have received 1.4 CR. How much you have received in this year? Meaning remaining 0.5 CR you have received in next year. So 0.5 CR you have received in next year. Possible? Yes or no? Now out of 1.4 CR, by way of prescribed modes you are receiving 1.3 CR. 1 point and 0.1 CR you have received in other modes. Yes or no? Out of 0.5, on or before the due date, on or before the due date of ROI, you have received 0.35 CR and 0.15 CR you have received after the due date of ROI. So what I am doing, I am identifying that when my turnover is actually received. So some part of my turnover, see, turnover relates to this year. For this entire year, how much was your total turnover? 1.9. Now this turnover I have to take. I have to take 8% of 1.9 CR. Yes or no? I have to take 8% of the turnover of this year. What is the turnover of this year? 1.9 CR. So I have to take 8% of 1.9 CR. Yes or no? But out of this turnover, some turnover is received in cash, some is received in prescribed modes. Yes or no? Other than prescribed modes, some turnover is received in this year only. The amount is received in this year only. Some received in the next year. So I have to identify that turnover, part of that turnover which is received in this year or on or before the due date of filing ROI of this year by way of prescribed modes. I have to take 6% of that turnover. Instead of 8%, I will take 6% of that turnover which is received in this year in prescribed modes or on or before the due date of filing ROI of this year in prescribed modes. Yes or no? So for that, I am classifying this thing. Okay. So out of this prescribed modes, 0.3 CR, 0.5 CR, everything is 0.15 CR. Here it was not there. Now tell me, how much is the turnover for this year? Out of this, how much you have received in this year? So out of this 1.4 CR, how much is in prescribed modes? On that you have to apply 6%. So any turnover which you have received in this year, on that you have to apply 8% only. But if it is received in prescribed modes, then you can apply 6%. But if you receive the turnover on or before the due date of filing ROI also, on or before the due date of filing ROI also, on that turnover also you can apply 6% provided it is also received in prescribed modes. So can you see some part of your turnover you received in the next year. Out of that, on or before the due date you have received how much? 0.35. Yes or no? On this entire 0.35, no. On or before the due date of ROI received in prescribed modes is how much? On this also you can apply how much? 6%. And on the entire balanced turnover you have to apply 8%. Now don't see that when it was received, how it was, no. Only the turnover which is received in this year or on or before the due date of filing ROI of this year, on that turnover you have to apply 6% provided that turnover is received by way of prescribed modes. So how much is received in this year by prescribed modes? 1.3 CR. On that apply. How much is applied? How much is received on or before the due date of filing ROI by way of prescribed modes? 0.3 CR. On that apply. And on all the other amounts, you have to apply how much? 8%. Will you remember this? Sure, sir. So calculate 6% of 1.3 CR. Don't do 1.3 into 6%. Huh? 1 crore 30 lakhs into 6%. 7 lakh 80,000. Then 10 lakh into 8%. 80,000. Then 30 lakhs into 6%. 1 lakh 80,000. Then 50 lakhs into 8%. 4 lakhs. And 15 lakhs into 8%. 1 lakh 20,000. Everyone got this? Add all these amounts. $15 lakh or a higher amount. At least show this much or a higher amount as your PGBP income. This should be your PGBP income on a presumptive basis. Will you be able to calculate this? So if you are showing at least 15,60,000 or a higher sum, then separately deductions under section 30 to 38 will not be allowed. No need to maintain the books and no need to get them audited. Understood? Now if the question is silent, they are not saying that how the turnover was received. Then take 8%. Take 8%. But if they are specifically saying that the turnover is received by way of prescribed modes, for that turnover you are supposed to take 6%, provided that turnover is received in this year or on or before the due date of filing ROI of this year. On that turnover you are supposed to apply 6%. Done, sir? Now see. Now section 44 AD says, that once you follow 44 AD, you have to follow 44 AD for the next 5 years also. Meaning, in the next 5 years, if your turnover is within the limit of 2 crore or 3 crore, as the case may be, then for the next 5 years also, you are supposed to maintain 44. You are supposed to follow 44 AD, meaning that at least show 8% or more as your PGBP income for the next 5 years also. Don't keep on switching. No, this year 44 AD, next year normal, again 44 AD, next year again normal. Don't keep on switching. Be consistent. If in a year you are following 44 AD for the first time, so for the next 5 years also you are supposed to follow 44 AD. Meaning, if the turnover is within the limits in the next 5 years, then for those next 5 years also at least show 8% or a higher sum as a profit for the next 5 years also. So for example, in the previous year 25-26, in my previous year, what is happening? That the turnover was within the limit. Turnover was within the limit. Turnover was within limits. Within the limit of what? Within the limit of 2 crores or 3 crores, as the case may be. So on this turnover, I have to check. I have to take at least 8% or in some cases 6% of turnover or higher amount. Yes or no? So this is what? This is section 44 AD. So in the previous year 25-26, since my turnover was within the limit, so I have shown as a minimum amount as the profit for this year. So can I say in this year I have followed 44 AD? Yes or no? So since I have followed 44 AD in this year for first time, next 5 years. How many years? Next 5 years, meaning previous year 26-27, previous year 27-28, previous year 28-29, previous year 29-30, and previous year 30-31. Assuming that in all the years your turnover was within the limit, every year at least show how much? 8% or higher sum. 8% or higher sum. So in all the years you are supposed to follow what? 44 AD. In all the years you are supposed to follow 44 AD. If in the next 5 years the turnover is within the limits. Understanding? So now tell me, did you follow 44 AD in this year? In the year 26-27? Yes. Did you follow in this year? Yes. Meaning every year your turnover is within the limit and you are showing how much? 8% or more. 8% or more. 8% or more. Every year you are doing that. This year also the turnover was within limit and you have shown 8% or more. But what happened in this year, you know, in 29-23, 29, 30 in this year. In this year. Now in this year, even if your turnover was within limit, is your turnover is within limit? The answer is yes. The turnover was within the limit. But instead of showing 8% or more as a PGBP income for this year, can you show less than 8% as your profit in this year? See, once you follow 44AD, next 5 years you have to follow 44AD. Hello? So next 5 years, in the 4th year, for example, in the 4th year, even if your turnover was within the limit of 2 crores or 3 crores, as the case may be, but this time, your real profits, you calculated, you came to know that, buddy, this year my turnover is, example, 1.6 crore. How much? So I should take how much? 8% of this as my profit for this year. So take 8%, 12,80,000. So at least I will have to show how much? 12,80,000 as my profit for this year. But actually I calculated, no, this year my business has suffered heavy losses. Possible or not possible? And when I calculated, my profit for this year was only 2 lakhs. So will I like to pay tax on 12,80,000? Even if knowing that in the current year my profits are way less as compared to 8%. Would I like to pay tax on this? But I am stuck. Because they have told me that once you start following 44AD, next 5 years you will have to follow 44AD. So now even if in the 4th year or in any of the year, even if my profit was actually lower than 8%, I will not be able to show it. Because I have to show at least 8%. Hello? Will anyone follow 44AD in that case? No. People will be reluctant, assessees will be reluctant. That boss, if I start following 44AD, next 5 years, I will have to at least show how much? 8%. And in any of the year, even if my profit will be less than 8%, the government is going to charge tax on at least 8%. So in that year, even if I am having a loss, I will have to pay tax. Even if I am having a less profits, I will have to pay tax on more profits. So 44AD is a risky thing. I should not be doing it. I should not be showing my profits as per 44AD. So nobody will be taking the benefit. People will get afraid of this section. So they have given some relaxation. What relaxation? That out of these 5 years, in any of the year, even if the turnover was within the limit, still, if you want, you cannot follow 44AD. You cannot follow 44AD, meaning you can show lower profits. You can show lower profits. So how much was your profit? Sorry, how much was your turnover? 1.6 crores. 1.8% of that. So at least in this year, you were supposed to show how much? If you show 12,80,000 or a higher, that means you have followed 44AD. Hello? But if you are showing lower profits or a loss for this year, lower profits means you are showing 2 lakhs. Or this year you calculated your loss and you are showing a loss for this year. Can you show that? Can you shift out of 44AD? The answer is yes. The moment you stop following 44AD, what do I mean by that? I mean to say that in that year, the turnover was 1.6 crore. You had to show 8% minimum as your profits, meaning how much? 12,80,000, at least this amount you had to show as a profit, but you are showing lower profits. Meaning you are not following 44AD. You are showing lower profits in this year. Can you do that? The government has given the relaxation saying that, okay, no problem, you can do that. Actually your profits are lower, then we will not compel you to pay tax on 12 lakh 80. Calculate your profit as per normal provisions. Yes or no? And that profit is lower than presumptive profits. No problem. Pay tax on lower profits. Or if it is a loss, we will give you the set off. No problem. But even we will have to check, no? That bloody why in this year you are not earning 8% also, and you are showing less than that 8% also. Because in any business, at least 8% of the turnover people will earn as what? Profits. In any business in India, people usually earn a net profit of what? Minimum 8% of their turnover. And you are not earning that bare minimum 8% also, you are showing less than that, then we will be also interested in knowing that why this collaborative, meaning why your profit is below 8% also. So for this year, calculate the profit as per regular provisions by following regular provisions, meaning after taking all the deductions and everything. Yes or no? In this year, compulsorily now you will have to maintain the books also and get them audited. If for this year your total income is more than basic exemption limit. So for the year in which you stop following 44 AD, out of the next 5 years, for the year in which you stop following 44 AD, meaning stop showing the presumptive profits and you start showing lower profits. Yes or no? Profits lower than the presumptive profit. No problem, in that year you can show it. But in that year, now calculate the profit as per regular provisions after taking all the available deductions from section 32, 38. Now you'll have to maintain the books also. Now you'll have to get them audited also. If your total income for that year is more than basic exemption limit. So in this year, can I say in 29-30? Can I say in 29-30, even if your turnover was within the limit, you are not following 44 AD, meaning showing what? Lower profits. Showing lower profits. The profit which is less than the presumptive profits. Yes or no? Showing lower profits. So in this year, now these lower profits are to be calculated by following what? Regular provisions. Of what? Of PGBP head, by taking all the deductions of section 32, 38, and also for this year. What did I say? And also for this year, now the books of accounts will also be maintained and they will also be audited. Yes or no? But this thing will be only if this year's total income exceeds your basic exemption limit. We will not tell you to maintain the books and get them audited if this year's total income is within the limit of basic exemption limit. But if your total income for this year is more than basic exemption limit, then compulsorily for this year now you will maintain the books also and get them audited also. Understanding? And show the lower profits, we don't mind. But now remember, during the next 5 years, within the next 5 years, if in any year you are showing profits lower than presumptive profits, yes or no? Even if your turnover was within the limit, and still you are showing lower profits, no problem, we are going to allow you. Show that lower profits. But now remember, next 5 years. What did I say? You cannot follow 44 AD. Meaning, next 5 years means? Next 5 years means, sir, from this year, now you have to count next 5 years. Now, which are the next 5 years? Previous year 30-31, previous year 31-32, and previous year 32-33, previous year 33-34, and previous year 34-35. 35. Even if, what did I say? Even if turnover is within limit. Now for these 5 years, you are not eligible for 44 AD. You cannot follow 44 AD. So once you enter, no exit for 5 years. Once you enter, no exit for. Exit is allowed in one exceptional case. That in the next 5 years, in any year, if the profits are lower, you can show lower profits. You can take the exit. Exit will be available only once. You can show the lower profits. But that exit is based on the condition that the year in which you will exit, in that year, PGBP income will be calculated on regular basis. The lower profits which you are calculating will be calculated on regular, by following regular provisions, taking the deductions of section 32, 38, and in that year, if the total income was more than basic exemption limit, you will have to compulsorily maintain the books and get them audited also. And now, for the next 5 years, even if your turnover was within limit, you cannot follow 44 AD. Will you remember? So once you enter, no exit for 5 years. Within those 5 years, if you take exit on your own, then there is no re-entry for the next 5 years. Understood? Now pay attention. I'll put you in one trouble. Okay. What was your previous year? 25, 26. In this year, since the turnover was within the limits, and you have shown at least 8% or a higher sum as a PGBP income on a presumptive basis. Yes or no? So in this year, have you followed 44 AD? So in this year, 44 AD was followed for the first time. Now in the next 5 years, you have to follow 44 AD only, no? So which are next 5 years? 26, 27, previous year 27, 28, previous year 28, 29, previous year 29, 30, and previous year 30, 31. Everyone, you have to follow 44 AD. But for that, the turnover should be within limits, no? What if in the third year itself, your turnover exceeds limit? Now, even if you want to follow 44 AD, you cannot. Now, there is no other option. What did I say? There is no other option. You cannot follow 44 AD in this year. Did you understand the difference between this and this? What is the difference? Here, in the next 5 years, in the year 29-30, meaning in the fourth year, even if your turnover was within limits, you were not following, meaning voluntarily coming out showing lower profits. Yes or no? Then you cannot again come back in 44 AD for the next 5 years. Understood now? Your turnover was within the limits. You should have followed 44 AD. But did you follow 44 AD? Did you show a minimum amount as your PGBP income? No. You were showing lower profits in that year. Then, next 5 years, you cannot follow 44 AD. And in that year, what are you supposed to do? You are supposed to calculate the PGBP income by following regular provisions, claiming the deductions under section 32, 38 separately, yes or no? Maintaining the books, getting them audited. And for the next 5 years, you cannot again follow 44 AD. Here your turnover was within the limit. And still you were showing lower profits. Option was there to show presumptive income. Option was there to show presumptive income because your turnover was within the limit. But here, in the third year itself, even if you wish, you cannot show presumptive profits. Why? Because to follow the presumptive provisions, your turnover should be in limit. And bloody your turnover has only exceeded. Now if your turnover has exceeded, will you be able to follow 44 AD? No. So in this year, what are you supposed to do? 44 AD cannot be followed. Yes or no? So presumptive PGBP income cannot be shown. So in this year, what are you supposed to do? Regular PGBP provisions will be applicable, and in this year, now you are going to calculate your PGBP income by taking the deductions from 30 to 38. All the deductions you are going to take. In this year, you are going to maintain your books of accounts, and also you are going to get them audited because your turnover exceeds the limit. Now these type of assessees will be compulsorily required to get the books of accounts audited if their turnover exceeds the given limit. Hello sir. And they can be compulsorily required to get the books of accounts audited even if the turnover was not exceeded, but they were showing lower profits. So if you are showing lower profits, then also compulsory audit. And if your turnover exceeds, then you will have to follow what? Normal provision, and then also compulsorily books of accounts must be maintained and they must be audited. Understanding? Should I move ahead? Now pay attention. In this year, regular provisions will be followed, meaning PGBP income will be calculated by following regular provisions. 30 to 38 deductions will also be taken. Books of accounts will also be maintained and they will be audited. Now tell me the restriction that next 5 years 44 AD cannot be followed even if turnover is in limit. Yes or no? This restriction will not be applicable here. Why not? Because you are not coming out on your own. You wanted to follow, but you cannot follow. Why? Because your turnover exceeded the limit. So we will not stop you to come to 44 AD again within the next 5 years. Possible, no? Within the next 5 years, again your turnover will be within the limits. Hello? Possible or not possible? So this year, for example, your turnover was, example in this year your turnover was 2.1 crore. And because of that you have to come out. What if in the immediately following year, your turnover again becomes 1.8 crores? Can you again start following 44 AD? The answer is yes. There is no restriction that for the next 5 years you cannot again follow 44 AD. Because this time you did not come out voluntarily. This time there was no other option. So see, once you get into 44 AD, next 5 years, if the turnover is within limits, you have to follow 44 AD. Understanding? So during those 5 years, in any year, even if the turnover is within the limits and you are showing lower profits, then for the next 5 years, you cannot again follow 44 AD. The restriction is there. And that same restriction you cannot apply here. Because here, in the next 5 years, even if your turnover is within the limit and you are coming out, no. Here you have to come out, because in the next 5 years, in any of the year, your turnover exceeded the limit. Your turnover exceeded the limit, hence you are not following 44 AD. So that restriction for not following 44 AD for the next 5 years will not apply here. Meaning, if in the immediately following previous year, if again your turnover is up to 2 crores, you can again follow 44 AD. Got it, sir? Hello. So are you an assessee? Resident, individual or HUF? Resident, individual or HUF? Or firm other than LLP? Are you doing any business? What type of business? Any business. But the business should not be a specified profession, transport of goods, earning commission and brokerage and agency. Other than this, any business you are doing, the turnover of that business during the current previous year is up to 2 crores. But in some cases, up to 3 crores. When 3 crores? When 3 crores? If 5% of the turnover or less is received in cash, then even if the turnover is more than 2 crores but up to 3 crores, for that business also 44 AD can be followed. Now, once you decide to follow 44 AD, once you decide to follow 44 AD, what are you supposed to do? Simple. At least show 8% of your turnover as your profits or a higher amount. At least show 8% of your turnover as your profits or a higher sum. In some cases you can show 6% also. 6% of which turnover you can show? The turnover which is received during the previous year itself or on or before the due date of filing ROI in prescribed modes. For that turnover you can take 6%. For any other turnover of the previous year, you are supposed to take 8%. So at least show 8% of your turnover, 6% of turnover in some cases, or a higher sum as your PGBP income. And if you will show PGBP income by following these presumptive provisions of 44 AD, then in that year in which you have shown 44 AD, meaning in which in that year in which you have shown profits as per 44 AD provisions, in that year separately deductions under section 32, 38 will not be available. Meaning it will be assumed as if you have claimed it and we have allowed it. No need to maintain the books for that year, no need to get them audited. Done. Now once you follow 44 AD for any year, for the next 5 years, you have to follow 44 AD. Assuming that your turnover was within the limits. But we will allow you to show lower profits also. Even if your turnover was within the limits, still you can show lower profits in any of those 5 years. Yes or no? Provided you maintain the books of accounts for that year, get them audited also if that year's total income exceeds basic exemption limit, and you promise that in the next 5 years, even if your turnover is within the limit, you will not follow 44 AD. So once you follow 44 AD, next 5 years, turnover is within limits, you have to follow 44 AD. Meaning you have to show at least 8% or a higher sum as your profits. But in any of those 5 years, can you show lower profits? Even if your turnover was within limits, even if you have to show at least 8% or a higher sum as your profits, in any of those 5 years, can you still show lower profits? The answer is yes. But the year in which you will be showing the lower profits, in that year, calculate lower profits as per normal provisions by taking all the deductions of section 30 and 38. Yes or no? And in that year, you will maintain the books of accounts. You will get them audited. if for that year your total income is more than basic exemption limit. And remember, for the next 5 years now, even if the turnover is in limits, still you will not be allowed to follow 44 AD. Now what if in the next 5 years, in any year, your turnover exceeds the limit? Then even if you want, you cannot follow 44 AD. In that year, you will have to calculate the business income by following regular provisions after taking deductions of section 32, 38. Yes or no? And for that year, the books will also be maintained and they will also be audited. And restriction that for the next 5 years, you will not be allowed to follow 44 AD. This restriction is not applicable here. Now later on, whenever again your turnover will be within the limits, even if within the next 5 years, still you will be allowed to again start taking the benefit of 44 AD. Because this time you are not voluntarily leaving, you had no other option since your turnover exceeds the limit. Will you remember this? Sure, sir. Pakka, no? Now this is your PGBP income, which you have calculated on what basis? Presumptive basis. Under the head PGBP, can you calculate your regular PGBP income and can you show under the head PGBP? Yes. Now you can calculate the PGBP income on presumptive basis, and that income also you can show under the head PGBP. So under the head PGBP, for any business, the income can be calculated on regular basis also. Under the head PGBP for any business like this, okay, you can calculate the profits on presumptive basis also. For regular business, for the businesses for which you are calculating on regular basis, you will take section 32, 38 deduction separately. But for the business for which you are calculating on what basis? Presumptive basis. For those business separately, no deduction will be available under section 32, 38. Only the restriction is on deductions under PGBP head 32, 38. They will not be separately allowed. What about chapter 6 deductions? ATC to ATU, which is available from GTI. That is available from all your incomes, yes or no? Even from your PGBP income, you can claim chapter 6A deduction. So can you claim those chapter 6A deduction out of your PGBP income? Yes, whether the PGBP income is calculated by regular provision or presumptive provisions will not make any difference. So in your GTI, from your GTI, when you will calculate your chapter 6A deduction, when you will claim your chapter 6A deduction from your GTI, and GTI includes your business income, meaning from business income chapter 6A deduction can be claimed. Whether the PGBP income is calculated on presumptive basis or regular basis will not make any difference. Chapter 6A deductions are still available. Only deduction which is not available is the deductions available under the head PGBP starting from section 30 to 38. Those deductions will not be allowed. Chapter 6A deduction will be available. Will you remember? Yes or no? And one more very important thing. Advance tax provisions. Which provisions? See, every assessee who is liable to pay advance tax. Now, who is liable to pay advance tax? When he is liable to pay advance tax, how the advance tax is calculated, that we are going to learn. That is a separate chapter only. But whenever you pay advance tax, advance tax is what? Your income tax, which you are going to calculate in the assessment year. That income tax in advance you are paying during the previous year itself. So whenever your income tax, which was charged in the assessment year, that income tax is collected from you during the previous year itself in the form of advance tax. When you are supposed to pay that, how much advance tax you are supposed to pay, how you are going to calculate, those things we are going to learn later on. Okay, no. But whenever you are liable to pay what? Advance tax. Remember, advance tax you have to pay during the previous year. And now this advance tax which you are going to pay during the previous year, there are due dates. 15th June of the previous year, then 15th September of the previous year, then 15th December of the previous year, and 15th March of the previous year. On or before this due date, certain amount of advance tax must be deposited. On or before this date, certain amount of advance tax must be deposited. On or before this date, certain amount must be deposited. Meaning, on every due date, a minimum amount of advance tax has to be deposited. Understanding what I am trying to tell you? On or before 15th June, minimum this much amount. On or before 15th September, minimum this much amount. So dates are also given, and on or before that date, a minimum amount has to be deposited. It is compulsory. So, my first question. You are an assessee following presumptive provisions. Following? Showing your PGBP income on what basis? Presumptive basis. Will the advance tax provisions be applicable on you? The answer is yes. Advance tax provision is applicable for all assessees. So even if you are an assessee showing your business profits on what basis? Presumptive basis. For you also, there will be a liability to pay advance tax. Advance tax provisions will also be applicable on you. And once the provisions are applicable on you and you are also liable to pay advance tax, then advance tax will be taken from you. But it will not be taken in 4 installments. Like it is applicable for all others, it will not be applicable for you in 4 installment. On or before this date, pay minimum this much amount. That minimum requirement, payment of minimum tax on or before a particular date is not applicable for assessees. Assessees calculating PGBP income on what basis? Presumptive basis. For them, only one date is applicable. 15th of March. Which date? You have to make sure that on or before 15th of March, you have to deposit your entire advance tax. A minimum amount on or before 15th of June, a minimum amount on or before 15th of September, minimum amount on or before 15th of December. This requirement is not there for assessees following presumptive basis. Yes or no? So if you are calculating your profits on what basis? Presumptive basis. Are you going to pay your advance tax in 4 installments? No. A minimum requirement of this much installment is not applicable on you. But you have to make sure that advance tax provisions are applicable on you. You have to make sure that advance tax is fully deposited by you on or before 15th of March. Now if you pay small amount at whatever convenient time, you can do that. But you have to make sure that you deposit your entire advance tax on or before 15th of March of the previous year. Will you remember this? So 4 installments will be applicable or will not be applicable? Will not be applicable. A minimum amount has to be deposited on a particular date or prior to that? No requirement like that. Pay whatever amount of advance tax whenever you want during the previous year. But make sure that your entire advance tax is paid on or before 15th March of the previous year. Will you remember this? Will you remember this? And the last point which I am going to discuss now. Now see, sir, previous year 25-26, first time you followed 44 AD. For the next 5 years also you are supposed to follow 44 AD. So tell me, previous year 26-27, previous year 27-28, previous year 28-29, previous year 29-30, and then previous year 30-31. Yes or no? Now let's take one example. That let's take in previous year 29-30. Which previous year, sir? Now in this year, your turnover within what? Limit. Turnover is within. Still you don't want to follow 44 AD and you want to show what? Lower profits. Is it allowed or it is not allowed? It is allowed. Yes or no? So this year, are you going to follow 44 AD or you are going to calculate lower profits as per regular provisions? As per regular provisions, yes or no? Now in this year, there is another possibility. In this year, there is another possibility. What possibility? That your turnover exceeds what? Limit. So even if you want, can you follow 44 AD? No, 44 AD cannot be followed here. And in this year, you have to calculate, you have to apply what? Regular provisions. Yes or no? So the lower profits you are going to calculate as per regular provisions. Lower profits you are going to calculate as per regular provisions. And here also, whatever profit you are going to calculate, that profit you are going to calculate as per regular provisions. Now what the regular provision says? Tell me. What the regular provision says? That in this year, you are going to take all the deductions from 30 to 38. 32. Understanding? So in this year, now deductions under section 30 to 38 will be separately allowed now. Yes or no? Now you will have to calculate the depreciation also, and you will have to allow that depreciation also, because depreciation is between 30 to 38, section 32. So as per section 32, you are going to calculate the depreciation for this year. Now to calculate the depreciation in this year, WDV has to be taken. Yes or no? WDV has to be taken. But last time, when did you calculate WDV? Previous year, 24-25, when you were following what? Regular provisions. That time you calculated WDV. After that, have you calculated WDV? Because in every year, you were following 44 AD, 44 AD, 44 AD. Depreciation was not separately allowed. So did you calculate WDV for these years? Did you claim depreciation for this year? So can you take this WDV here? The answer is no. What WDV you will take? The year in which now you will again start following regular provisions. In that year, now you will have to calculate the depreciation also, no? Because all the deductions from 30 to 38 will be allowed. So in this year, now the depreciation will also be allowed. So to calculate the depreciation in this year, you need what? WDV. And how will you calculate that WDV? Because the WDV, you cannot take this old WDV, or you will take this same WDV in this year. Come on, tell me. In the previous year 29-30, will you take the WDV of 24-25? Sir, yes, because in the in those years 25, 26, 26, 27, 27, 28, 28, 29, I did not calculate depreciation and I did not claim depreciation. So that WDV was only there. So on that WDV only I will calculate tight slap. For the years for which you are following 44 AD, for the years for which you are following 44, it will be assumed as if you have claimed all the deductions and we have allowed all the deductions including depreciation. So even if we are not allowing you the depreciation separately, for every year you will have to keep on calculating your WDV. And the depreciation for these years will be reduced out of the original WDV, and after reducing that depreciation, whatever WDV is remaining on that, you are going to calculate what? Depreciation in 29-30. So when did you last claim depreciation? 24-25. In that year, whatever closing WDV was there, you take that as an opening WDV in the next year. Calculate the depreciation. So every year you are supposed to maintain that block. Next year, in the year 25-26, opening WDV will come. Additions, deletion, and calculate the depreciation for that year. But don't claim it separately. Then again calculate the closing WDV for that year. Then 26-27, opening WDV will come. Again addition, deletion, depreciation for 26-27. Yes or no? It will give you closing WDV of 2627. Then that will become opening in the 2728. 2728. Again, addition, deletion, you will calculate the depreciation. You have to keep on calculating the depreciation for every year. And keep on calculating the WDV for every year. Not to claim the depreciation separately, but you will have to keep on calculating that depreciation and calculating the WDV. The closing WDV as on 31st March 2029 will become the opening WDV for 1st April 2029. And on that amount now you are going to charge what? Depreciation. Because for these many years for which you had been following what? 44 AD, it is assumed as if you have claimed all the deductions and we have allowed all the deductions including depreciation. So keep on calculating your depreciation, don't claim it separately. It will be assumed as if that depreciation is claimed by you and it is allowed by you. So keep on reducing that depreciation for every year and you will have to find out the opening WDV as on the first day of the previous year in which you are again following what? Regular provisions. Will you remember? This is the end of 44 AD. This is the end of 44 AD. Will you remember this? Now coming to the next section. But before this, please check. 44 AD is a presumptive provision in which PGBP income is presumed, meaning calculated on a presumptive basis. Who is the assessee? Resident individual, HUF or firm other than LLP. Engaged in any business other than these four business. Any other business, the turnover of that business during the current previous year should not be more than 2 crores. And in certain cases, the limit is 3 crore. Now you have the option. If your turnover is within this limit, you have the option to declare at least how much? 8% of such turnover or a higher amount as your PGBP income. Now instead of 8%, the assessee can declare 6% also if the turnover of the current previous year which is received on or before the due date of filing ROI by prescribed mode. For that turnover, the assessee can show 6% instead of 8%. Deduction under section 3237(1) assumed to be claimed and they are allowed. Books of accounts not required to be maintained and not required to be audited. Yes or no? But remember, chapter 6 deduction will be allowed. Because chapter 6 deduction you can claim from your GTI, and in your GTI whatever business income is there, from that business income chapter 6 deductions are supposed to be available. Whether the business income is calculated on regular basis or presumptive basis, chapter 6 deductions are not denied. Only the deductions under the head PGBP starting from 30 to 37(1) will not be separately allowed. Yes or no? Next one. This example I have already taken. Okay, this example already taken, and then all these examples. I have already covered all these examples. Yes. Perfect. Now coming to the next section. 44 ADA. 44 ADA. This is also a presumptive provision. Hello sir. This is also a presumptive provision. In this provision also a PGBP income is presumed. So can I say 44 ADA is a presumptive provision? And in this provision, what are you going to do? In this provision also, PGBP income is what? Presumed. An amount will be presumed as a PGBP income. But this is not applicable for all the assessees. This is applicable only if the assessee is a resident individual or firm other than LLP. Sir. HUF is not written. 44 AD is applicable for individual HUF or firm other than LLP. Here, only individual and only firms other than LLP. HUF is not written. Huh? So 44 ADA not applicable for HUFs. It is applicable only in the case of individual and firms. Firms other than LLP. engaged in any specified profession. Which profession? Do you remember the specified professions? Stand up, madam. Center, stand up. Close your book and tell me the 11 names of specified professions. First. Huh? Specified profession, 11 professions. Tell me the names. Close the book. You also, madam, sitting besides. And if you are not able to answer, no, go home. Right now only you are going home. I've been seeing you since a very long time. 11 professions. Come on, give me the answers first, or else leave. You, stand up. 11 professions. You all should not be allowed to sit in the class, you know. Don't try to act over smart in front of me. This is the last warning and last time I'm leaving you both. If I'll see you talking now onwards, I'll throw you out of the class and I'll make sure that you don't sit in my lecture. This basic question you are not able to answer. Then why do you bloody come to the class? To do your chit chat that you can do at your home also without disturbing anyone. Sit down. 11 professions. Stand up and say 11 professions. Chartered accountants, then doctors, engineers, interior designer, then only music composer. First lawyer, then doctor, then engineers, architects, accountants, interior decorators, then technical consultants, authorized representatives, then film artist. 11 professions which are specified in 44AA subsection 1. Yesterday only I have told you. So the section which is applicable, which we are going to do right now, that section is applicable for all businesses, all professions. Only the assessee is engaged in specified professions. Those 11 professionals. Okay. And if the gross receipts of this profession of the assessee should be this assessee. Okay. So the gross receipt of the profession of the assessee is up to 50 lakhs. Up to how much? Then for this profession also presumptive provisions are there. 44 ADA will be applicable. And as per 44 ADA, the assessee has an option. Assessee has an option to show presumptive profits. But see, for that the gross receipts, what did I say? Gross receipt of this profession of the assessee, for that the gross receipt should be up to 50 lakhs. 50 lakhs or less. 50 lakhs or less. But in one exceptional case, even if the gross receipt is more than 50 lakhs, but it should not be more than 75 lakhs. Still the provisions of 44 ADA can be followed if out of the entire gross receipts, 5% or less is received in cash. So out of the entire gross receipts, if 5% or less is received in cash, then even if the gross receipt is more than 50 lakhs, still the provisions of 44 ADA can be followed. Still the assessee is eligible for 44 ADA, provided the gross receipt should not be more than 75 lakhs. So, something like this I have already done here. Do you remember this entire working I had done? So, instead of turnover, we'll take gross receipts. Maximum cash receipt should be 5%, and actual cash receipt, we'll compare both and we'll say whether eligible for 44 ADA or not. Okay, no? So now instead of turnover, we'll check gross receipts and we'll compare with maximum cash receipts at the rate of 5% of that gross receipts. Okay, no? Then we'll check actual cash receipts and then whether we'll say whether he is eligible for 44 ADA or not. Yes or no. Okay, no? So for example, the gross receipt is only 35 lakhs. Are you going to check this? No. No need to check. Up to 50 lakh gross receipt is there. You are eligible. You are eligible without any additional condition. Okay. So are you eligible? Yes. What if your gross receipt is 50 lakhs? Still eligible. Up to 50 lakhs, you are eligible. What if your gross receipt is 60 lakhs? So now you'll have to check 5% limit. So 5% of this is 3 lakhs. And in real, now you are going to say that how much of the gross receipt is actually received in cash. It was only 2.8 lakhs. So out of the total receipts, only 2.8 lakhs is received in cash, which is within the limit of 5%. So you are eligible even if your turnover is more than 50 lakhs, but it is less than or equal to 70 lakhs. Yes or no? Now here, if it was 60 lakhs, so this should be 3 lakhs. And cash receipts out of this is how much? 6 lakhs. Have you received the gross receipt in cash? Yes, 10 lakh, but that is more than 5% of your gross receipt. Yes or no? Hence, are you eligible or not eligible? So even if your turnover is more than 50 lakhs and less than or equal to 75 lakhs, still you are not eligible. Why? Because the cash receipts in your profession is more than 5% of the gross receipt. Yes or no? Will you remember this? Okay. Now, here, what they are saying? This is 44 ADA. Can be followed if gross receipt is more than 50 lakhs, but up to 75 lakh if less than or equal to 5% of gross receipt is received in cash. Okay, perfect. Now, assessee is a resident individual or a firm other than LLP doing any specified profession. In that specified profession, gross receipt is within the limits. Limit of 50 lakhs or limit of 75 lakhs as the case may be. Then 50% of this gross receipt. How much? 50% of this gross receipt or a higher sum can be declared as a PGBP income. 8%? That was in 44 AD. Here it is 50%. So, out of your gross receipt, 50% amount minimum or a higher sum you can show as your profit. Because in specified professions, no, usually the profit margins are huge. Whatever you receive from your customers or your clients, almost the entire amount is your profit only. You spend very less in your profession as expense. Majority of the cases, the profitability is 70-80%. In some cases, 85-90%. Whatever receipts are there, to earn this receipt, the expenses are incurred. Those expenses are not huge expenses. What type of expenses? Small expenses will be incurred. So in your profession, to to earn the professional income, you are not going to incur huge expenses like other businesses are doing. They have to bloody maintain the stock also. Do you maintain any stock? No. So their major cost is what? Their stock, etc. Cost of their stock. And other, different expenditures are also there for them, which are heavy expenditures. So for them, out of their turnover, 8% we are taking because their spending is higher. Their expenditures are higher. But for you, you are in a profession, and that too also a specified profession. What type of expenditures you are going to have? Almost the entire gross receipt will be treated as your profit only. You are saving your entire gross receipts as your profits only. You just thank us that we are not taking 70%, 80% of your gross receipt as your profit. We are telling you to show at least half amount of that as your profit. Getting my point? So at least show how much? At least show 50% of your gross receipt or a higher sum as your PGBP income. If you will show at least this much amount under section 44 ADA as your presumptive income, no need to claim the deductions of section 30 to 37 separately. It is assumed that they are claimed and allowed. Yes or no? No need to maintain the books and get them audited. Simple. And all the other things are same only. But remember, the restriction of 5 years is not applicable here. Once you follow 44 AD, then you have to follow it for the next 5 years. Even if you are within the limit and still you are showing lower profits for the next 5 years, you cannot show 44 AD. That restriction was there, no? In 44 AD, that restriction is not here. Meaning, this year you are following 44 AD. What is this year? Come on, tell me. Previous year, 25, 26. Okay, no? So this year, your gross receipt was in limits. So gross receipt is within the limit. So this year, at least 50% or a higher sum, you are showing as a profit. So are you following 44 ADA? Tell me, are you following 44 ADA? So there is no requirement that for the next 5 years, you are supposed to compulsorily show 44 ADA. Yes or no? So can I say in the next year, previous year, 26, 27, previous year, 27, 28, previous year, 28, 29, previous year, 29, 29, 30. In whatever year you want to follow 44 ADA, you follow 44 ADA, and whatever year you want to show lower profit, show lower profits. We don't have any problems. Understanding or not? Now tell me, in 26-27, you followed 44 ADA. Why? Because your gross receipt was within the limits. And you have shown 50% or a higher sum as a PGBP income. In this year, you have shown how much? 50% or a higher sum as your profits in this year. Sure, no? Now in this year also, your gross receipt is within the limit. Your gross receipt is within the limit. You should have shown at least 50%. But this year, even if your gross receipt is in limit, yes or no, still you are not following 44 ADA. Can you show lower profits in this year? Yes or no? So lower profit you calculate by following regular provisions, claim 32, 38 separately, yes or no? Then maintain the books of accounts and get them audited also in this year if this year's total income is more than basic exemption limit. So now the restriction was there that you cannot again follow what? This presumptive provision for the next 5 years is not applicable here. In the immediately following year, if the gross receipt is in limit, again you can follow what? 44 ADA. There is no restriction on that. So it is comparatively more simpler as that of 44 AD. Now again in the next year, if you want to follow 44 ADA, you can follow, or if you don't want to follow, you don't want to follow. But remember, If your gross receipt is within the limit, then at least show 50% or a higher sum as your profits. But if you are showing lower profits, then we will allow you to show lower profits. But please make sure that the year in which you are showing lower profits, in that year you are calculating the income as per regular provisions by taking all the deductions of section 32, 37(1). But in that year in which you are showing lower profits, compulsory books of accounts must be maintained and they must be audited if in that year your total income is more than basic exemption limit. And once you show lower profits in any previous year, there is no restriction that for the next 5 years again you cannot follow 44 ADA. There is no such restriction. Understanding? So whenever you want, you can again start following 44 ADA. Advance tax installments, only one, on or before 15th of March. Yes or no? Pay the entire advance tax liability in whatever way you can. But make sure all the advance tax is paid by you. Chapter 6 deduction, like it is available from professional income calculated on regular basis, it will be available from professional income calculated on presumptive basis. Chapter 6 deductions are not denied. Then how to calculate that WDV? In that same manner in which we have already discussed. So last time when you calculate your WDV, after that for few years you have followed 44 ADA. So for those years, calculate the depreciation as you normally do, but don't claim those depreciation separately, because for those years you are following what? 44 ADA. After reducing all those depreciation, whatever WDV will be there, on that WDV, you are going to claim what? Your depreciation. When you follow regular provision in that year, on the WDV, which is remaining after reducing the depreciation for those years for which you have followed what? Presumptive provision. So when did you last follow? When did you last follow regular provisions? In this year, WDV was calculated for the last time. Now in this year 44 ADA, but now again in 27-28, you are again following regular provisions. So in this year, what will be your WDV? Simple, the WDV which was a closing WDV in 24-25. After that for 2 years you have followed what? 44 ADA. For 2 years the depreciation will be calculated. You will have to calculate the depreciation for these 2 years. Even if that depreciation will not be separately allowed, but you will have to calculate this depreciation. After reducing the depreciation for these 2 years, in the year 27-28 the WDV will come. On that WDV, now you will start getting the depreciation. Understanding? All the provisions of 44 AD and 44 ADA are same, except that requirement of what? Except that restriction that 5 years again you cannot follow. That restriction is not applicable here. Will you remember this? Now last provision. Last provision is 44 AE. Which provision? 44A. Now this presumptive provision can be followed by any assessee. Not specifically individual, HUF, it can be followed by any assessee. Now the requirement is the assessee should be in the business of plying, leasing, hiring of goods carriages. Plying, leasing, hiring, etc. of what? Goods carriages. So, do you have goods carriages? Did I say that you are in the transportation of passengers business? No. You are not in the business of transportation of passengers. You are in the business of transportation of goods. Meaning that the assessee is a transporter whose business is plying, hiring, leasing of what? Very important. Plying, hiring, leasing of goods carriages. So you are a goods transporter. Okay. Now in your business, in your transport business, where you are giving goods carriages on rent. Okay. In this business, you must be the owner of goods carriages. But the goods carriages owned by you in your business throughout the year should be 10 goods carriages or less. So how many goods carriages owned by you throughout the year? 10 or less. 10 or less. Even on a single day, if the number of goods carriages owned by you exceeds 10, you will be ineligible for 44A. Even for a single day. Meaning, starting from which date? 1st of April of your previous year. Till 31st March of your previous year. Okay. For this entire year, throughout goods carriages owned should be less than or equal to 10. If even for a single day the number of goods carriages exceeds 10, you will not be eligible for 44A. So 44A is available for small transporters who owns 10 or less than 10 goods carriages in their business of plying, hiring, leasing, renting of goods carriages. Yes or no? Now, if 44A, you become eligible for 44A. Why? Because throughout the year, you are the owner of 10 or less goods carriages. And you are in the business of plying, hiring, leasing, renting, etc. of goods carriages. So, you are eligible for 44A. Now, once you become eligible for 44A, we are telling you a minimum amount, show this much amount as your PGBP income or a higher sum. So, a minimum amount we are telling you to show at least this much amount as your PGBP income or a higher sum. No need to take the deductions under section 32, 37, 1 separately. Yes or no? No need to maintain your books of accounts and no need to get them audited. Everything which was there is same. Understanding? But what is the minimum amount which you are supposed to show? You are supposed to show minimum 7,500 per month for each vehicle owned by you. So for every month of ownership of a vehicle during the previous year. What did I say? For every month of ownership, per month of ownership, or even for part of the month's ownership of the vehicle during the previous year. You are going to show minimum how much amount per vehicle. So per vehicle, per month ownership, or even for the part of month's ownership, you are going to show minimum how much? 7,500. That means from that vehicle, minimum 7,500 you are earning. That you are supposed to show. Earning for the period for which the vehicle is used. No. For the period for which the vehicle is owned. So during the year, if you are owning a vehicle for 12 months, every month, how much you are earning? Minimum 7,500 per vehicle. Yes or no? Or a higher sum also you are earning. You can show higher sum also. Getting my point? But what if you are owning any vehicle for 11 months and 11 days? Did you hold the vehicle for 12th month fully? Part of the month is also full month. So 11 months, 11 days will be taken as 12 months. Because for even the part of the month's ownership, you are supposed to show how much? 7,500. Even if you are holding the vehicle for 8 months and 3 days, 9 month, full month you are not the owner. Only the 3 days you are the owner. Yes or no? Still for the 9th month you are going to show what? Still you are going to show how much? 7,500. So for example, you are the owner of a vehicle from the beginning of the year and you are selling that vehicle on 9th of November. So did you own the vehicle since the beginning till 9th of November? How many months ownership? April, May, June, July, August, September, October. 7 months full ownership. And 9 days of November will also be taken as a full month. Because for part of the month ownership also you are supposed to show 7,500. Yes or no? And the income you are going to show based on number of months ownership only. Income you are going to show based on the number of months ownership, not based on the number of months for which the vehicle was used. No, use is irrelevant. What is relevant? Ownership. Now what if you are buying one vehicle on 29 September? You are buying one vehicle in this year on 29. So you became owner in which month? For how many days? 29, 10, 32 days of September. And then October to March. 6 months and 2 days. September month also you will have to show 7,500. So this is bad, no? Don't buy on 29 September. Who is telling you to buy? Even for a single day's ownership in a month will be counted as a full month ownership. Yes or no? Will you remember this? Pakka, no? Now every month per vehicle, how much you are going to show? 7,500. Per vehicle, per month of ownership, or even for the part of month ownership, you are going to show minimum 7,500 or a higher sum which you are actually earning from that vehicle. You can show that also. Yes or no? But wait. This is the presumptive income. This is the minimum income per vehicle you have to show for all vehicles other than heavy goods vehicle. If you have any heavy goods vehicle, for heavy goods vehicle, you cannot show 7,500 per month or part of the month. You have to show at least 1,000 rupees for per ton of the gross vehicle weight. You will have to show at least 1,000 rupees per ton of that gross vehicle weight. So first of all, what is a heavy goods vehicle? Heavy goods vehicle is a vehicle whose gross vehicle weight, or in some cases it is also known as unladen weight. So you have to see what? Gross vehicle weight or unladen weight of the vehicle. Now what is this? This is the weight of the entire body of the vehicle. So what is the weight of that vehicle and how much weight that vehicle can carry? So how much weight can be loaded on the vehicle plus the vehicle weight, both taken together, is what? Gross vehicle weight or unladen weight. Yes or no? Now wait. Total gross vehicle weight is 12 tons or more. Then the vehicle is heavy goods vehicle. So first of all you will have to check gross vehicle weight. If the gross vehicle weight is less than 12 tons, then 7,500 per month. But what if the gross vehicle weight is 12 tons or more? 12 tons or more, then the vehicle is a heavy goods vehicle. For that vehicle you cannot show 7,500. You have to show 1,000 rupees for per ton of gross vehicle weight. 1,000 rupees at least for per ton of gross vehicle weight. For example, the gross vehicle weight was 18 ton. How much? So per ton of gross vehicle weight you are going to show 1,000. So for 18 ton minimum 18,000. So for this vehicle the minimum income you are going to show will be how much? 18,000 rupees per month or part of the month ownership. Yes or no? What if the gross vehicle weight is 15 ton? Then will you show 7,500? No. Per ton 1,000, meaning 15,000 rupees per month or part of the month ownership. What is the gross vehicle weight is? 14 ton. Show 14,000. What if the gross vehicle weight is 12 ton? Show 12,000. What is the gross vehicle weight is 10 tons? Why? Because now the gross vehicle weight is less than 12 tons, it is not a heavy goods vehicle. For such vehicles, you are going to show 7,500. Yes or no? Will you remember this? At least show 7,500 or show 1,000 rupees for per ton of gross vehicle weight for every month's ownership or even the part of the month ownership as your PGBP income on presumptive basis, or a higher sum also you can show as your PGBP income. Yes or no? All the deductions under 30 to 37(1) assumed that you have claimed and we have allowed. No need to maintain books. No need to get them audited. Chapter 6 deductions are also available. And for you also, the advance tax installments are available only one. No. Only 44 AD and 44 ADA. One installment, one date, 15th of March. Here, nowhere it is mentioned that if you are following 44A, we are going to give you relaxation for advance tax installments. No. So, no relaxation is available here. Yes or no? Will you remember? Next, second point. Do you remember I told you that if you follow 44AD, next 5 years, you have to follow 44AD. But even if you are within the limit and if you show lower profits, next 5 years you cannot show, but you cannot follow 44AD. Yes or no? That restriction was not available for 44ADA, and that restriction was not available for 44AE also. Now this year, what did I say? This year means previous year 25, 26. So for previous year 25, 26, the number of vehicles, the number of goods carriages less than equal to 10. Less than equal to 10. So meaning the number of vehicles is within the limits. So for this year, can you show 44AE income? Yes, per vehicle 7,500 or a higher sum. And for which vehicles? Heavy goods vehicle, 1,000 rupees per ton of gross vehicle weight or a higher sum. Understanding or not? So this year you have shown 44A, presumptive income. Minimum this much amount or a higher sum you have shown as an income for this year. Now there is no requirement that for the next 5 years compulsory you have to follow this. Then if you exit, then for next 5 years you cannot again follow 44A. No such requirements. That means in previous year 26-27, previous year 27-28, in these 2 years also gross goods carriages less than equal to 10. Goods carriages less than equal to 10. In these years you are following what? 44A. These 2 years you are following 44A. You are showing 44A profits. Presumptive profits. Amount specified or a higher sum. Amount specified or a higher sum. That you are showing. But in that year 28-29. Now in this year, even if your goods carriages are not more than 10, still you are not following 44A in this year, and you are following what? Lower profits. You are following. Meaning now you have to calculate this lower profit as per regular provisions. Yes or no? You have to calculate and claim depreciation. You have to calculate and claim deduction under 32, 38. And now books of accounts will also be maintained and they will also be audited. Please be very careful. Here your total income greater than basic exemption limit, or even if your total income is not more than basic exemption limit, you have to maintain the books and you have to get them audited. Do you remember in 44AD and 44ADA, I told you that in a year in which you are showing lower profits, in a year in which you are showing lower profits, in that year you will maintain your books and you will get them audited only if in that year your total income was more than your basic exemption limit. So for those 2 sections, maintaining books and getting them audited for that year was required only if in that year the total income was more than basic exemption limit. Here there is no such requirement. The moment you will show lower profits, compulsory books must be maintained and they must be audited, whatever may be your total income. Even if your total income is not more than your basic exemption limit, not more than your, still you are supposed to maintain books of accounts and you are supposed to get them audited. And advance tax installments, all the 4 installments will also be applicable on these assesses. 44A done. All the presumptive provisions done. Miscellaneous part of the chapter done. 5th part of the chapter done. Chapter is done. Entire PGBP over. Now, in the PGBP, 2-3 questions, small questions are remaining. Let's pick up those questions. But before that, do you remember yesterday we did one question for Shivam? Do you have that question? Go to that question. Question number 7. Question number 7, no? 7. See, question number 7, test your knowledge. Okay. Did you calculate the normal PGBP income of Shivam by following regular provisions? Hello. Yesterday we calculated the normal PGBP income. How did we calculate? Guys, how did we calculate? We took the net profit, then add, less, add, meaning we took all the applicable deductions, this and that, yes or no? So the profit as per the normal provisions was 1,30,900. Can you see? Now Shivam is in which business? First line of the question. Shivam is a retail trader. First of all, is he doing any specified profession? No. Is he in the business of transportation of goods? No. Is he doing any agency business? No. Is he in the business of commission or brokerage? Meaning retail trade is an eligible business. Eligible business for 44 AD. Shivam is an individual. Nothing is mentioned. He is a resident. So a resident individual doing a retail trade business is an eligible assessee who can opt for 44 AD. Who can opt for, provided the turnover of this retail trade business is not more than 2 crores. Or in some cases, 3 crores also. Yes or no? So do you have the turnover of his business available with you? Bloody that sales which is credited is nothing but the turnover only, no? So can you say the sales, how much? 11,500. Is it the turnover? Is it less than 2 crores? Is the Shivam eligible for 44 AD? And if he shows 44 AD income, how much minimum income he has to show? 8%. Wait. But go to the last 2 lines of the question. Last 2-3 lines. Whole of the amount of turnover received by account pay check or use of electronic clearing system through bank account. Meaning that entire turnover for which you are taking 8%, no? Now you are supposed to take 6%. Understanding or not? So take 6% of this. 6 lakh 72,690. This will be your PGBP income if you follow 44 AD. But what if you follow regular provisions? It was only 1,30,900 regular provisions. Yes or no? So first they are telling you to calculate. See the required part. You are required to compute the. You are required to compute the profit and gain of Mr. Shivam under the presumptive taxation which you have just now calculated. How much? 6,72,690. And profits and gains as per regular provisions. Yes or no? Which we calculated yesterday. It was 1,30,000. And assuming he has exercised the option of shifting out. Okay. Now assume that the whole of the amount of turnover is received. So for both you are supposed to calculate. You are supposed to calculate for presumptive also, and you are supposed to calculate what if he was following regular provision. So if he was following regular provision, his PGBP income was 1,30,900, and if he follows 4480, his presumptive income will be, PGBP income will be 6,72,000. They have told you to just calculate these two incomes. They have not told you to advise. Now, as a chartered accountant, if you have to give the advice to Shivam, you are the CEO of Shivam, what advice will you give? Pay tax on 6,72,000 or don't follow 4480. Because if you will not follow 4480, your profits as per regular provision is less. And for that, what are we going to do? We'll maintain the books and we'll get them audited. The only requirement is maintenance of books and getting them audited. We'll get it done, sir. So it is always better to pay tax on a lower amount. So if advice is taken, advice will be this much. Since the profit as per regular provisions is lower as compared to 4480, it is advisable to shift out of 4480 and show lower profits as per regular provisions after claiming deductions under section 32, 37, 1. Books of accounts, and books of accounts will be maintained and will be audited only if this year's total income is more than basic exemption limit. That's it. Go and check the answer. Same answer. But advice is not sought, so don't be over smart in giving your advice. They are just telling you calculate PGBP as per regular provision, calculate that, calculate PGBP as per presumptive provision, calculate that. That's it. No need to give your expert advice because it is not required in the question. But if it was required, your advice would have been like this. Understanding? So now you understood that why I left that question yesterday? Okay, now that question is freeze. Now let's come to the other questions fast. Very easy questions. Illustration number 16. Mr. Praveen is engaged in, first of all, Mr. Praveen is an individual. Nothing mentioned he is a resident. So resident individual engaged in which business? Retail trade. Can I say Mr. Praveen is also an eligible assessee and retail trade is also an eligible business. So 44 AD provision can be followed. But it can be followed only if the turnover of this retail trade business is within the limit. Yes or no? Now the turnover is how much? Ayyo, turnover is more than 2 crore. So you cannot follow 44 AD normally. But if 5% of this turnover or less amount is received in cash, then you can still follow because the turnover is not more than 3 crores. So take 5% of this. 14 lakh. Now see, for the financial year 25-26, this was the turnover. Amount received in cash is how much? Is it within the limit of that 5% which you have calculated? So even if the turnover is even if the turnover is more than 2 crore, still it is less than or equal to 3 crores. Can he follow 44 AD? The answer is yes, he can follow 44 AD. Next one, and the balance through prescribed electronic modes. Oh my God, out of 298.50, he is receiving how much? 14 lakhs in cash and balance in prescribed modes. So the turnover which he will receive in prescribed modes, 6% of that. And for this 14 lakhs, 8%. Yes or no? So do one thing. On 14 lakhs, calculate 8%. 1 lakh 12,000. And out of 2 crore 98 lakh 50,000, reduce 14 lakhs. You will get 2 crore 84 lakh 50,000. On that calculate 6%. 17 lakh 7,000. This is what? This is, first you take, wait. I'll write it here. So first you take 2 crore, 98 lakh 50,000 minus 14 lakhs. And for this you are going to calculate how much? 8%. On this you are going to calculate, 6%. 6% is this much and 8% is this much. Both taken together. Both taken together. 1,12,000 plus 17 lakh 7,000. How much is the total? 18 lakh. This is the minimum amount which you have to show as your presumptive income under section 44 AD. Yes or no? Yes or no? So now see. And the balance to prescribed modes on 31st on or before 31st July 26, his income from the said business. What did I say? His income from the said business as per books of accounts is 15 lakhs. Meaning this is the PGBP income which is calculated regularly. So how much is the PGBP income which is calculated on regular basis? 15 lakhs. Okay. Computed as per the provisions of chapter 4D, meaning as per the regular provision. Retail trade is the only source of income for Mr. Praveen. Assessment year 25-26 was the first year for which he declared his business income in accordance with the provisions of the presumptive taxation. Which assessment year? This year or last year? Last year was the first year when he had shown 44 AD. So for the next 5 years, he has to show 44 AD. Meaning in this year, this is the first year. After the last previous year, next 5 years. So out of next 5 years, this is the first year. 25, 26. So in this year, if the turnover is within the limits, you have to show what? You have to show 44 AD. How much? 18 lakh 19,000. Because last year for the first time you have claimed. So from this year onwards for 5 years you have to show. And in this year also your turnover is within the limits. So you will have to show minimum 18 lakh 19,000 as your PGBP income. Yes or no? But what if you want to show lower profits in this year? Can you show? Yes. In the next 5 years, in any year, you can show lower profits. But in that year, if the total income is more than basic exemption limit, you will maintain books of accounts. You will get them audited also. Yes or no? So, is Mr. Praveen also eligible for presumptive determination of his income chargeable to tax for the assessment year 26-27? So last year he calculated and claimed for the first time. Is he eligible for this year also? Yes. Why? Because he is a resident individual and his turnover in this year does not exceed 3 crores. Why you have taken 3 crores? In the bracket you are supposed to write down that total cash receipts is not more than 5% of the turnover. Hence, in this year he is eligible for 44 AD. First question done, answered. Okay. Second question. If yes, he can follow, then determine his income from retail trade as per. So, first of all, tell us whether he is eligible or not. The answer is yes, he is eligible. You will write down the answer that yes, he is eligible. And what is the reason? You are going to write down that reason. Second, if he is eligible, then what will be his presumptive income as per that provision? 18 lakh 19,000, which you have already calculated. This will be your answer number 2. Yes or no? Now third answer, in case Mr. Praveen wants to declare profit as per books of accounts from the retail trade, what are his obligation? So can he show 15 lakhs instead of 18 lakh 19,000? Yes. First of all, once he follows 44 AD, next 5 years, starting from 25-26, he cannot show lower profits. He has to follow 44 AD. But still, he can show lower profits if he maintains the books of accounts and get them audited. That will be his obligation. So obligation will be, what will be his obligation? First of all, can he show lower profits as per books of accounts? Yes. Out of the next 5 years, in the first year only, that means in previous year 25-26 only, if the profits as per book is lower as compared to the presumptive profits, 18,19,000, he can show the profits as per books, meaning lower profits. There is no restriction on that. But if he does that, then in that year, he will have to maintain the books of accounts. He will have to get them audited also. Yes or no? And for the next 5 years, even if the turnover is within the limit, he cannot follow 44 AD. He will have to follow the regular provisions. That will be his obligations. Can you write down this thing in your language? And the same thing which I am explaining is given in theory there. Okay? Today at home you are going to read it. Done, sir? So this question is also answered. What is the due date of filing his return of income under both the options? Very interesting. Huh? This is very interesting question. What is the due date of filing his return of income under? What if he follows presumptive basis? Presumptive basis. He will show 18,19,000. Yes or no? Is he required to maintain the books? Is he required for audit? And if audit is not required, his due date will be 31st July. Due date of filing ROI will become 31st July. That is what they are asking. And what if he follows, what if he shows lower profits? 15 lakhs. Then compulsory books will be maintained and compulsory audit will be done. Meaning now the assessee will be covered by tax audit provisions. And for him, the due date will be 31st October. That is what they are asking. Will you be able to answer such questions? If this type of question will come in the exam, it will be a kind of case study, case scenario. And based on this, MCQs can also be asked. And this type of question will be asked, can be asked for 6 marks also, 4 to 6 marks. And you are supposed to give small answers in your own language. Will you be able to write down? Okay, very good. Now, but read this question read the solution at home today, huh? Okay. Now, illustration number 17. What this illustration says? Please check. Mr. X commenced the business of operating goods vehicles on 1st of April 2025. Meaning this year he has started his transport business, transport of goods. Meaning he is in the business of plying, hiring, leasing, renting of goods carriages. And this business is started in this year. Okay. He purchased the following vehicles during the previous year 25-26. Compute his income under section 44A. That's it. You just have to calculate his income under section 44A. For any heavy goods vehicle, 1,000 rupees per ton of gross vehicle weight. And for other vehicles it is per month or part of the month's ownership. Per month or part of the month's ownership. Yes or no? But he can do it only if throughout the year number of vehicles is 10 or less. Is he having 10 or less vehicles? You will have to first check that. No, first you will have to check that. When is the date on which he first purchases were made? So first 2 vehicles are purchased. So these 2 vehicles are purchased for first. Now when these vehicles are purchased, total vehicles owned, ownership is how many vehicles? Tell me. As on 10th April, 2 vehicles owned, meaning ownership 2 vehicles, less than 10. Second, which vehicles are purchased? 15th March? No. 16th July? Yes. Second, these vehicles are purchased. 3 vehicles. Understanding? Now they have deliberately shuffled. They have deliberately not given in sequence. So after April, you will buy in July only, no? So in July, how many vehicles you have bought? 3. Already you are the owner of 2. 2 plus 3? You are the owner of how many vehicles? 5. Still not more than 10. Then next, which vehicles you will buy? August. This is the third purchase. Yes or no? How many vehicles are there? 2. You are already the owner of 5 vehicles. And 2 are purchased, meaning 7 vehicles. Now next, which vehicles you are going to buy? January. January, yes. After August, January only, no? After August, January you are buying 1 vehicle. Then January 1, that means at that time the number of vehicles owned will be 8. Then you are going to buy in February. Then you are going to buy in February 1 more vehicle. Then it will become 9. And last vehicle you are buying in March. At that time your total number will be 10. Are you the owner of more than 10 vehicles at any time during the previous year? No. You are the owner of, throughout the previous year, you are the owner of 10 or less than that. What I would have done, you know? I would have given 2 vehicles in the month of March. Gone. Total will be 11. Even for a single day, the number of vehicles owned is more than 10. You lose the benefit of 44A. Now what will be your presumptive income under 44A? You will have to write down, since the number of vehicles owned as on 15th of March becomes more than 10, that is 11 vehicles, hence, provisions of 44A cannot be followed, and the assessee will have to calculate his PGBP income by following regular provisions only. Full stop. You will get 2 marks for that. But here, since the number of vehicles is 10 or less throughout the year, now for every vehicle, what are you going to do? You are going to show a minimum income as per 44A. For these 2 vehicles, gross vehicle weight is how much? 7,000. 7,000 gross vehicle weight means heavy goods vehicle or a normal vehicle. So for normal vehicle, how much you take? 7,500 per month. For how many months you are going to take? For the number of months ownership. So 2 vehicles are owned for how many months? How many months? 12 months. Starting from 10th April month ownership is also there. Even for the part of month, the ownership is there. Full April will be counted. Yes or no? April to March. How many months? 12 months. For how many vehicles? 2 vehicles. Calculate. 1,80,000. Okay, no? Next 1 vehicle. Ownership is only for 16 days of March. Ownership is only for 16 days of March. What are you going to do? For this vehicle also 7,500, but only 1 month ownership is there. So 1. And how many such vehicles? 1. So the income will be 7,500. Okay. 16th July, 3 vehicles are there. So April, May, June, 3 months ownership is not there. 3 months ownership is not there. From July, the ownership is there for 9 months. So 7,500 into how many months? 9 months. For how many vehicles? 3 vehicles. It will be 2,500. Yes or no? Now, for this vehicle also 7,500 you are going to take. For this 1 vehicle. Yes or no? But from January, February and March. For 3 months for 1 vehicle. This will be 22,500. Yes or no? Now last 2 vehicles, the gross vehicle weight is 15,000 kilograms. Meaning 15 ton. So per ton you are supposed to take 1,000. So income will be 15,000. For how many months? August to March. August to March. How many months? 8 months. So into 8 months. For how many vehicles? 2 vehicles. This will be how much? 2,40,000. And last vehicle also you are going to take 15,000 rupees income. Because 15 ton multiplied by 1,000 will give you 15,000 minimum income. Yes or no? And for how many months? 2 months. February and March. For how many vehicles? 1 vehicle. 30,000. Can you do the total of these amounts? 6 lakh 81,500 if I'm not wrong. 6,82,500. Yes or no? This is the presumptive income as per 44A. Minimum amount this much you have to show or a higher sum for this year. So if you are following 44A, then minimum this much amount you are supposed to show as your presumptive income or a higher sum. Hello sir, please pay attention. See that the calculation, the way in which they have calculated, no, don't pay attention on that. Calculate in that same manner in which we have done. See, 6,82,500. So the presumptive income of X under section 44A would be how much? 6,82,500. We also got that amount. Okay. Now in that question they are telling you, would your answer change if the goods vehicle purchased in April 25 were put to use only in July 25? Meaning these two vehicles which you purchased on 10th of April were put to use from July. Then will you calculate for 9 months? Or you will still calculate for 12 months? Because the presumptive income under section 44A is calculated for the months of ownership and not for the months for which the vehicle are used. So even if the vehicles are used only from July to March, but since the ownership was from April to March, for these vehicles the income will be calculated for 12 months only and not for 9 months. Hence the answer remains same. The answer is not going to change even if those vehicles were used from July onwards. Understanding everyone? So this was the end of your 44AE. Okay, one more question is there. We'll do it after the break. Take a break, half an hour.